I'm afraid, but HCL Tech stock today is not excited. It was at a 52-week low ahead of numbers, and despite numbers, it's not turning out to be a case of buy the rumor and sell on news. I mean, normally what happens is that when a stock is weak into the run-up of weak numbers, of markets anticipating weak numbers, markets tend to price that in. But the fact that the stock was at a 52-week low, numbers, even though they are weak, there is no short covering, which means that numbers have been below the uh, consensus view as well, and that is where the challenge I think is coming in. For a stock which was weak, has now become a short in terms of the technical setup. The other interesting point which we want to discuss is that if one looks at the SIP culture in India, thank God for that, it has only become more and more clear that Indians now want to use equity as an instrument to plan their long-term wealth creation. The SIP flows over the years, that's a very impressive number. What was almost like a monthly number, yearly number, has now become a monthly number. There was a time when I used to say that India, the total SIP collections in a year are about 12 to 15,000 crore. That number now stands at 12 to 14,000 crore on a monthly basis. But interestingly, even though for the first time this COVID bull run has got challenged, the SIP numbers have not dwindled. In the month of March, April, May, June, July data is not out, but last couple of months, the SIP data in India has been firm. But on the other side, which is the other end of the spectrum, Demat accounts, where you had seen more like a surge, an exponential surge. 4 crore Demat account became 8 crore Demat account. The number of new Demat accounts which are opening up, that has dwindled. Is it because of market? Is it because of base? Is it because no large IPOs are coming in? Is this a trend? How should we read into it? Lots of questions, and the man who's got all the answers, a very dear friend of mine, Nithin Kamath, founder and CEO of Zerodha, he joins us. Nithin, so good to have you back. Thank you for joining us. How are things?
Thanks, Nikunj. No, things are okay. Things are good.
Are they good for business? Because if Demat accounts come down, it's not good for business.
Yeah, and I mean, I think we were living in the middle of excesses last 1-2 years, so this was just bound to happen. I mean, we were kind of prepared for this. So yeah, so I mean, it's happening now. So
Is this more like a canary in a coal mine? More like a harbinger of what lies ahead in terms of the retail participation and which way the individual risk appetite would move?
see, the thing is, historically, right? I mean, we've been doing this business for like 12 years now, and if we were to look at our account openings or the overall account openings in the country, and we had to map it to the Nifty or maybe even the Nifty mid cap, it was almost a mirror image. So it's always been like this. I mean, markets do well, new people come to the markets. Markets don't do well, new people stop coming. Now the big issue for our business is, it's like being on a treadmill, uh, because when existing people have drawdowns, they tend to become inactive, right? As in, they don't trade, invest more. So unless there are new people adding to the markets, you don't really grow as a business. So it's just to be where you are, like in a treadmill, you have to run types. And um, which is a problem not just in India, across the world. You pick up exchanges or broking businesses across the world. Their performance will very closely mirrored to how the underlyings behave. So I mean, if Nifty were to trend down, I think this is only going to get worse with time.
On a treadmill, you can always choose the intensity and the level at which you want to run. So my question to you is that while number of Demat accounts may have peaked out or number of Demat account openings may have peaked out, what is happening with individual accounts in terms of transaction, in terms of the nature of activity?
See, no, I mean, even there, right? As in, I think we are at like 2-year lows in terms of trading volumes on the exchanges as well. So that's also kind of come back to the earlier lows. Markets are volatile, so the very active intraday kind of traders or people who trade on futures and options, they still are having opportunities to trade. So so that piece of business is still okay. But the investing piece is seeing large drawdowns. The activity is down there. They're also like 20-30%, at least for someone like us who's added a lot of accounts. But on the exchange, overall exchange level, those drawdowns are more. So we are, like I said, there almost at 2.5 year lows in terms of equity trading volumes as well.
And has that started to change? I know the data is out for June. You also shared some, monthly active user data that was shared, which you tweeted about being for the first time since the Reserve Bank site. You said you'd never come across that kind of data.
Yeah. No, see, the thing is, everything is trending down, to be very honest. And it's just the only piece of the business that's holding up right now is the the very active trading population, which is a very small population. I don't know. I mean, most people don't understand that. Like 10% of the customers really contribute 90% of the volumes, and these 10% of the customers are very active traders who trade for a living, etc. So that crowd is still active. So but apart from that, people who are doing this part time, investing passively, etc., the activity there has dropped significantly. And yeah, so unless markets pick up, unlikely to see how that picks up again.
Okay, I know Nikunj always says that when anyone asks him tip, he always says sip. You guys also keep talking about the importance of SIP. So even though the new Demat accounts, which are down, what we are seeing and which is encouraging is SIPs, which are trending higher.
Yeah, no, absolutely. I mean, that's a silver lining in all of this. But there also, I think what we need to see is what happens when there is, if say the markets are 20% below, highs. Right, because historically that's when we've seen SIPs as well slowing down, right? So we're still not too far away from our all-time highs, etc. So there isn't any pain in SIPs, but if and when your SIPs should start showing some amount of losses as such, that's when the activity historically we've seen some slowdown. Like I think in 2020. Between April to June, July, the SIP monthly, month-on-month numbers kept going down. Similarly, if you go back in past, whenever there was large, like a 20% plus drawdown, we have seen SIPs slowing down as well. So I mean, while it's a silver lining, it again, the behavior again depends. SIPs has a lot lesser pain because your dollar cost averaged your whatever you've done. So the pain starts showing up very late, but it does show up at some point if the markets keep trending down. So I guess we'll have to wait and see, what happens if, hopefully there isn't, but if say the markets, had a drawdown of say 20%, what happens to that behavior? Do people still continue, not stopping their SIPs, etc.?
What is the next new trend or wave we should expect in the online broking industry? When I started my career, the commissions were 2 to 3%. One side, not buying and selling, one side. It's almost zero now. Right. What happens next? In next 12, 18 months, what is the new or disruptive thing you will unleash?
See, this is a question, we've kind of been asking internally for many years now, we've improved the platforms, we've given access to all tools and utilities, education, kept the cost really low. But the question to really ask is, has it all helped people do better with their money, right? The reason we exist today is, the reason why I do what I do, or the business does what it does, is to help people do better with the money. And and I think we need to do a lot more. I don't think people are doing better with their money just because we exist. So that isn't really manifested of sorts. So our focus right now is that is to figure ways to help people do better with the money. Now, helping people do better with the money, essentially for a platform like us, is to figure ways to avoid people from making money mistakes, right? As in, it's very tough to like really help because every person is different. But if you can somehow nudge a customer to avoid these 10 very basic fundamental money rules, you can maybe help him do better with the money. So one is around that. I think more platforms will have to start focusing on because your customer has to be active, right? As in, the big challenge in India is, while we are 130, 140 crore population plus, and the audience that can potentially invest is maybe 10 crores, right? As in, it's not like it's not while it's a large market in the long run, but in a 5-year kind of a run, maybe the market size isn't too big. So the only way for a platform like us to do well is to find ways in which our customers can do well, right? I mean, you can't always depend on continuously adding more customers, like we are seeing now, right? As in, new customers may or may not come in. Your job as a broker is to find ways to help existing customers do well. So one is around that, how do you reduce? Because money mistakes, and a platform like us can leverage technology for that. The other bit I think is around advisory. I think, India has 1,000+ advisors for, I don't know what, 10 crore customers, right? As in, it's kind of ridiculous. So that shallow number. So I think we need, someone has to do something to have more advisors out there. Today, the big problem for advisors is, they find, it tough to collect fees, etc. So, and also to be able to advise, you need access to customer data. I think with the account aggregator framework going, like it's getting a lot of force behind it. If account aggregator goes live with access to, your depository data, your banking data, etc., then tech first platforms like us can enable, better advisory of sorts. So I think these two things, one is find ways to reduce money mistakes for the customers, and two is, introduce advisors, because majority of the customers probably don't know what they're doing, as in, and they probably need help. And when it comes to money, people, tend to kind of connect better with humans versus, a push notification or, like a tech platform, right? As in, as soon as money becomes sizable, people like to talk to someone about it. And a professional advisor can kind of, who doesn't have conflict, right? As in, you can't have, a conflict in terms of what you're doing with the customer. So if you can take out all the conflicts out, professional advisors can help customers become professional. And then once the customers become professional, they can then go propagate whatever they've learned and make a lot more customers professional. So I think we need some of this to happen in India. So and we are thinking of ways to enable this.
Well, so nice to hear that, and so nice to have you back on the channel. I know your family and you're battling with fuel challenges, so wish you good luck at least on that front.
Cheers.